hold music. You want to avoid it, and so do your customers. So say goodbye to hold music and hello to faster, smarter support with Salesforce. Make service more personal and agents more productive using built-in trusted AI. Then watch costs and wait times drop and satisfaction soar. Support customers in a whole new way with Service GPT. Learn how at salesforce.com/servicegpt.
Welcome to Nature-backed podcast of Single Earth. In this series, we are talking with investors about their vision of the new green world. My name is Tarmo Virki, and in this episode, I'm speaking with Alex Konoplyasty from Flashpoint Ventures. Enjoy the show. Hi, Alex. Welcome to Nature-backed podcast. Tell us a few words about Flashpoint to start off with. Where was Flashpoint born?
Tarmo, thank you. It's a great pleasure. Thank you for having me and inviting me to this interesting discussion. By way of brief introduction, so I'm Alex. I'm co-founder and managing partner of Flashpoint. I'm Ukrainian-Russian by origin. I was born in Kiev. So in the current environment, I'm sort of in a bit of a peculiar position. And as we've been talking, the world being upside down, I think that's exactly how it feels right now. I have, after university, I have got a job at Morgan Stanley in London. And afterwards, I have worked at UBS. I have been always focusing and working for basically doing telecom and technology in my professional career as an investment banker. So I've been buying companies, selling companies, taking companies public. I've done a lot of these. And then after financial crisis in 2008, I thought that, it's become a bit boring, but also I have become a director at where I was. So I started thinking about, doing my own thing. And I have a friend, and today my partner, Michael, who we went to university together. Michael is Hungarian. So we shared the dormitory room and we've known each other for like 25 years now. So Michael had a similar professional background working for, finance and private equity. And similarly, he started feeling that, we have enough expertise and knowledge and we have made some capital to basically maybe do something ourselves. And Flashpoint started with us investing our own money into a startup that was doing insurance price comparison for online insurance. So that was like the first investment done. We've done it with our own money. Today, Flashpoint manages about 500 million assets under management. We are an international company focusing on investing into technology companies at various cycles of their development. So originally we started with venture capital, and over time we basically realized that, similar to our previous background, when we meet a company at early stage, and today we're meeting about several thousand of these companies every year. If you do only venture capital, you build a relationship with this founder, you spend time with him, you try to help him. Even before you give him money on pro bono basis, you try to, help him and stay close to him and build this relationship, which might turn into like a marriage and partnership, also financially. But if you have only one product, venture capital product, it's a bit illogical because you spent all this time building this relationship and you had only one chance to give him money. To me, when I was a Morgan Stanley banker, I could do M&A, IPO, I could do bonds, I can do brokerage, I can do loans, I can do so many things. So I build a relationship with the company and then I can give 15 different types of advice or service to the company. Here you have only one. So that felt a little bit illogical. And we decided that we want to do more products. So we have launched 2 more products so far, 2 more strategies. We have launched venture debt strategy, which comes after our venture capital strategy. Mm-hmm. So they don't compete against each other. So venture capital is an early stage capital for companies at the early stages of development. Venture debt is the next stage where you have already raised venture capital money, etc. So you can afford and you're the development where you can do venture debt. And then also we have a secondary liquidity fund aimed at even later stage to enable people like ourselves, because one thing that we felt that, when you're an early investor, it's very hard to sell your stake. So you've been an investor for 8 years, let's say, or 10 years in the company. It's been way too long, and the company still didn't find your exit, right? And we manage, other people's money. We have investors who give money to manage, so we have fiduciary duties to them. We must exit at some point, right? We cannot stay forever, unfortunately. And there's like very little number of people, if any, who are actively doing this, like liquidity, like cleaning up, the market, so to say. So we decided to also do this product. We have some more product ideas. And then Flashpoint today, we are a team of about 30 people. We have offices in Riga, Warsaw, Budapest, Tel Aviv. And we support founders originating out of Eastern Europe doing business internationally. So just by way of brief introduction, sorry if it took long.
No worries at all. It kind of gives context quite nicely. How many companies you kind of involved today? How many investments in your portfolio?
Thank you. So far, we have, in general, since 2012, when we launched, we have supported about 50 companies. We have done about 11 exits out of them. We have lost maybe one or two companies which were like very early stage. So we had a couple of write-offs only. And then today we manage a portfolio of about 40 companies, 40. And most of them are, so they're all united by the fact that the founders are originating from small countries of Eastern Europe and Israel. So what unites them is that these are very small markets, domestic markets. So you cannot build a company inside such markets as you could do in Germany or France or some other place. So you must do several things. You need to try and scale your product outside. So you need to build sales and marketing outside your geography. You need to understand, what product you need to build, because customers have different, preferences, right, outside your home market. So you need to explore that. You need to hire people outside your home geography, which is sometimes challenging because you don't speak the language as well. You have cultural differences, right? So you need to build it, and you need to raise capital outside of your geography. So all of these founders, they're united by these common problems. And we, as an investor, at the time when we come in, this is the set of problems that we're focusing on to help the founder, not only just giving him money, but stay close to him and help him on a daily basis solve these challenges and think about these problems, how to build the company.
I mean, very much true. Launching companies out of Estonia, you kind of understand that you have to be born global, otherwise it's kind of pointless. And that should happen, yeah.
That's absolutely true. Yes, and then I think our DNA has been, because we've grown up in these international organizations that historically have been built. The only way to build a large international corporation like Morgan Stanley, you can build it only on values, right? So otherwise, it's very difficult. So within my DNA and what we've experienced as professionals in those careers was this, DNA of international sort of corporation building, right? These values, and I think a lot of these values come to the core of Flashpoint. So for us, it's very much important that there are building blocks in your work that determine what and how and when you do. And for that matter, we also thing to mention is that our strategy is very much tailored towards that. So there are a lot of things that we don't invest in. So for us, the areas we're investing are very important. For example, we don't do lending, right? We don't do any lending because I personally feel that giving people weekly loans or monthly loans at a 50% interest rate, it's not good for us, right? So we don't want that. So we don't do that. We've never there's been a boom of marijuana and all of this health sort of stuff. We don't do that. We don't think it's right for us to be doing that. We don't do any gambling. We don't even do gaming because we think that we want to be investing and supporting companies and founders, whose mission is to, change the world for the better, right? Yeah. And where there is fundamental value in what you're doing. So for that matter, for example, we've been investing a lot in education. So we have maybe like 10 companies out of these 50 that we supported there in education. We have a number of companies in healthcare. We supported a whole lot of companies around that. We've been investing in companies that are supporting one company out of Finland that is doing third-party logistics for them, ESG and environmental friendliness and CO2 savings, etc. is quite important for what they're doing. So we've been, and we actually have several companies in like this domain of like logistics, delivery, making sure that, which helps on emissions and all of that stuff. So for us, these domains, although we don't have like an articulated strategy around ESG, but for us, inadvertently, this was always we're discussing actually right now, because the way we make decisions also is that we have like a scoring system. So we work in a way like a bank. So when we look at the situation, in order to analyze it, we need to fill in the scoring. We need to collect the data. So we're thinking about adding like an ESG score to the scoring. But in general, for us, this thing is important. Another thing which I think is important to mention in our discussion about like sustainability is that I think it's important not only in what you're investing, but also like what you're doing, right, as an investor in the company. And for that matter, I think for us, the way we see ourselves is that we are helping to build corporations. For us, corporate governance, transparency, reporting, these things, they're super, super important, right? A lot of the founders from our geography, because a lot of them are first-time founders, so they don't have as much experience, they've never built companies in their life. Also, they come from like geographies that are historically have not been as high on corporate governance, right? And a lot of these people, by way of their education and work, they haven't had this exposure or experience in general how to build and what are the perspectives. I'm not necessarily saying that the West is good, the East is bad. I'm just saying there are different perspectives, right? If you have had many perspectives, then you can make your own picture and decide for yourself what is good and what is evil and which way you should be going, right? So I think I feel like we have a lot of this picture that we are bringing to the organization to help. A lot of companies have gone from very small scale to now having like audit committees. So I'm like, for example, in one of the companies, I'm chairman of the audit committee. The company is like pre-IPO company, so they never had anything like that, right? But now there is an audit committee, there is a procedure, there are rules, there are regulations that you need to take to ensure transparency and governance of what you're doing. So for us, this is super important. The other thing to mention here is that we've been all like over these 10 years, for us, and for me personally, being part of the like local ecosystem and helping the local communities in whichever way possible is very important. So we've been working. For that matter, we work a lot with like local early stage investors, incubators, accelerators, angels. We produce a lot of content. We produce a lot of tools. We organize our events. So we proliferate, and we want the entrepreneurship in this region to prosper. We want, because for us, this is very important that there are many of these like people who are. That's one of the reasons why we are very focused on the scouting program. We have relaunched again. So we're trying to make sure that our scouting program works. We want to engage many people into this work. We want to make sure that we're actively involved. We started working with local universities because I think that students and helping students is very important, because for them, they are basically only starting, and a lot of them don't have an understanding, which way to go, etc. But we do want to support technical students out of universities, so we're starting to launch, some, smaller vehicles for like super early stage. And then lastly to mention, we just announced, we're in the process of announcing, so you will be one of the first ones to know. But we've been also like in the current Ukrainian war, we've been quite spending a lot of time, protecting not only our relatives who've become victims of this war, but also many employees of our companies, because our companies employ about 2,500, 3,000 people, right? So it's a lot of people are employed by our companies, and just by virtue of geography, a lot of them, of course, have offices in Ukraine and Russia. A lot of developers. So we've been helping a lot of these people. There are hundreds of people who got stuck and who are who need help. So we as an organization and personally, we've been helping both Ukrainians suffering with different types of aid, etc., but also trying to help these developers and their families to get out of the conflict area. So and on all of that basis, we decided to launch an initiative which we're calling Flashpoint Cares, which we're about to launch. And this initiative will aim to systemize our work around these areas, helping local communities, education, and health and safety. So we as Flashpoint, we want to be doing, we do a lot of things, but maybe a little bit sporadically today. I want to organize everything into a more streamlined strategy where we have an approach where we systemically, along these lines, we are helping, these people.
That's very, very cool. We all try to do on some level, of course, that. How do you see the kind of this effect of world going crazy, the war, the energy prices, all of that, maybe the new Iron Curtain in the Europe or something like that? How do you see this impacting the kind of green scene? Is it? I think last winter we had at least at some time when carbon and the sustainability were kind of on top of the agenda for a lot of Europe. Today, seems all the headlines are about the war. Do you think it will kind of turn this somehow wrong way?
I think in general, and it's not only connected like maybe directly to the war, but in general, I think the trend of the last several decades, I think has been there's been like two large drivers of the overall global social agenda. One is proliferation of internet and awareness of people, right? So you have 1 billion people living in Africa. You have several billion people living in like Asia who live in very, very poor communities, right? People live beyond the level of poverty that we in Europe like even can think about, right? Not even like imagine, because in UK they just announced that because of the energy prices, there will be 5 million households that will go sort of, and they phrased it very interestingly, below the level of like energy poverty or something like that, right? But these are households who are making like £5,000 a month, right? Or like £3,000 a month, and they're going to like some level of poverty. They forget that in Africa, a lot of people live like $1 a month and don't have anything. So what internet changes and what technology changes is that these people become aware, right, that there is another 2 billion people living much, much better than they do, right? With the war happening, and we've seen this with the immigration crisis in Europe when Libya happened, Syria happened, all of these conflicts started happening. How do you fight escalating conflict, social unrest? You put people on boats, right? You just put people on boats, so there is less escalation of unrest in these local countries, right? So I think in general, and that's what we're roughly seeing right now with the Ukrainian and Russian conflict, is you have 5 million people escaping this war zone, right? Will they come back? We don't know what's going to happen to them, but that's a huge immigration wave of people who don't have homes, don't have money, don't have anything. They just escape. A lot of them do, of course, but a lot of them don't. So there is a whole lot of this immigration. Of course, in Russia, many people who are finally realized that they disagree. They're fleeing the country in hundreds of thousands, if not million people are leaving to Dubai, Europe, wherever they can leave, wherever they can get access to their savings, and just to escape from all this nonsense and not be part of it, right? Because a lot of people don't support what's going on. They don't want to go to jail for their views, but they escape, right? Like myself, in 2015 after Crimea, I decided that they don't want to do anything with Russia at all. We don't do any business in Russia. And we don't do anything there. After 2015, it was a very strict decision for us. So I think that in general, driven by internet and world of communications, a lot of people, not only because of the war, but in general, there will be a lot of this social like happening, right? Because people realize that they're poor, somebody lives better than them for whatever. We've seen a lot of this like rising in the last years in the US, right? You have a lot of this like right wings appearing, a lot of this nationalistic movement, a lot of protection. A lot of people are now saying that globalism is over, right? Because people and businesses are not so secure to outsource production to China, to India, to somewhere else, right? So they want production be in the US. Yes, it would be more expensive, but they want to control and make sure there are no disruptions of these, like, because in COVID as well, it's a good example. Countries were closing down differently, right? There was no unison of like who's doing what. Even now, like if you look at Australia, they went like ballistic, like closed down everything. Some countries said, "Oh, no COVID," like Sweden. They like some other countries that said, "Listen, it's okay. We'll get by somehow. People will get sick anyway. People will," and it's hard to make any conclusions now. But I think that a lot of this stuff will be changing globalization. So the global trends are changing for sure. So changing globalization, rise in poverty, a lot of rise in like social unrest, nationalism, swing to the right. So a lot of these trends we're seeing, and like Russia-Ukrainian conflict, in my mind, it's also the outburst out of all of these trends that have been like developing. On one hand, and then on the other hand, I think that in general, Europe is in a bit of a tricky position because it's in the middle, and also it's gone through its own like development because we just had Brexit. European economy is aging, right? So people are aging. You need new workforce. Countries have been protective against immigration. Brexit actually kicked out a lot of Eastern Europeans or like Europeans out of the country. All of a sudden, people had to leave, and in the UK right now, it's a big problem, right? There are no like jobs, right? There are no workers. You have truck driver, you have tons of industries, sectors. Like you're doing construction, you cannot import goods from Italy anymore because they're stuck on customs for whatever reason, right? There is a lot of this disruption happening. So I think Europe is particularly in a tricky position, and also with the conflict of Russia-Ukraine, I think it's it's even more so peculiar because of the dependence on energy and all of this stuff. So the bill is going to rise, and what Europeans are going to do. There could be a scenario where once the war is hopefully over and peace settles, that Ukraine could be one of these factors for unification of Europe, and people will say, okay, let's support European countries. Here is like a Marshall Plan after the Second World War, right? Here is €500 billion. We print them for EU companies. Here's the money. Go, let's reconstruct Ukraine, right? It's good for Ukraine, but it's also good for Europe because then, a lot of these companies, they take money home, and there is like finance growth that was actually not spent on capital on stock markets after 08 crisis. All this liquidity went to stock market, and that's what that's why we've been having like this bubble popping up there. If we're constructing bridges, roads, and stuff like that, they don't need to be buying them. They just need to go and build them, rebuild them. But it's European capital for European companies, etc., or some contractors. It could be. And then the last thing to mention, maybe sorry the last thing to mention, I think that there is people at the times of shock, at the time of crisis, people start behaving differently. So our analysis today is, of course, we say, oh, it's all bad, this crisis, the war, So today it seems like terrible and awful, but people adjust differently, right? So people say, okay, energy prices are going up. Okay, I'll not take a ride on, I don't own Range Rover anymore. I'll own a cheap car. And by the way, I'm going to walk to work, right? I'm going to ride the bike to work. And all of a sudden, the energy spend shrinks, right? So we don't know how the consumer is going to adjust to this terrible shock that is happening around the energy. Maybe they adjust in a way that we don't expect today. And maybe, it's not going to be so bad as we expected, right? And we've seen historically, people do adjust in a shock situation. When it's gradual, it's sort of okay. But when it's shock, people tend to change their behavior. Yeah. Similar to COVID, right? COVID hit, people stop traveling, people stop doing their usual routines, Zoom appeared, right? When people change their behavior, we don't meet each other anymore.
Exactly.
We talk on Zoom.
Yeah, I think that was part of the Zoom business plan, right? It was actually built into their growth projections. They were actually doing it, not seriously. But I wanted to ask you about the kind of the bigger picture question about the East Europe. To me, it tends to be that many of the East European startups are, focused on B2B, focused on maybe some kind of business services and, some kind of SaaS business models. You tend not to see so much, at least historically, sustainability, environment, CO2, green, all these topics. I mean, by nature, they somehow maybe it at least feels to me that they are a little bit lower in the kind of focus areas for the East European startups. Have you seen any change in that? Or?
Yeah, I think, the explanation is obvious because, if you come from a poor family, the first thing you need to achieve is to make sure you feed your family. You buy them real estate, you feed them, buy them clothes, ensure that your mom has insurance and all of that stuff, right? So environment comes like way after all of these basic necessities, like Maslow pyramid, what we learned, in macroeconomics and microeconomics at university. But I think, so it's like old money versus new money. So I think Eastern Europe in that way has been like more newer money versus Western European older money, where, people start actually thinking about the home where they live and caring about that home. I think the new money is sort of less conscious about it. It's natural, so there is nothing wrong about it, nothing bad. I think that in general, and it's evolving. So I think as the average level of welfare in Eastern Europe is like catching up and growing, it will be a natural trend that people will start thinking a lot more about, the environment and the homes where they are living. I think, so that's number one. Number two, so on the founder side. Number two is more on the capital side, right? So if you look at, the type of capital who's supporting, like, let's say Sequoia is, advertising everywhere that, their money comes from non-governmental organizations. So predominantly, they take non-governmental money that they're then investing into startups. And that determines the length of, period that they're prepared to hold the capital, but also things that they're, sort of led to do because people give them money still, right? They sort of have an agenda, right? In a way, So if you are like ourselves, we're financed mostly like by family offices. We're starting to have institutional investors, but most of these institutions, they're still like more commercial. For them, it's more about IRR and return and less about the like environmental agenda. And we're in a way, we're in the middle. We're the middleman, right? We want to give money to founders, but we also have the capital that we have fiduciary duties towards these people as well. So the more we ourselves become institutional, the more we take money from like endowments of the universities. In Eastern Europe, none of the universities have such endowments as like Harvard or Stanford or anybody, right? Nobody has billions of dollars or like, tens of billions of dollars to invest into startups, right? So and it takes time to accumulate. So once this also starts changing, wealth accumulates, it will determine different types of agenda, right? That's why we launched Flashpoint Cares, because we want to recycle this agenda. We want to give back ourselves, what we made, to make sure that these people also stand up and they move, and we change this slowly. We move that direction.
But you say, overall picture is that slowly the region is moving. But have you actually seen kind of physical evidence that we are seeing startups in Eastern Europe popping up, which are focused on, I don't know, climate tech or green tech or... Absolutely.
We have seen actually several dozen companies that are like that are going for agriculture and green tech. And yes, absolutely. It's not thinking about clean energy. I mean, for us, some of these areas are more technical, right? So for us as an investor, we are not as technical and product driven, but absolutely, there are many companies like we actually do look at agriculture and agri-tech. There are a lot of things that are happening there. We just have not invested into any of these companies, but it's nothing to do like with the companies. So they continued. It more has to do with our focus on how we understand and how we can contribute. But there are absolutely. We're seeing some of these businesses appearing.
Yeah, I mean, also in Estonia, I think we've seen, half a dozen at least startups popping up, which are somehow related to carbon, for example, carbon CO2 decarbonization, the CO2 trade, and so on.
Yes. Marketplaces we've seen as well. Absolutely. No, it's slowly appearing. It's not a massive trend. Because I don't think that there is no like demand for it in this part of the world that much, right? So in Europe and in the US, there is like a demand. There is clear demand by corporations, by governments. In Eastern Europe, there is no demand. So companies, just founders themselves, they go.
Yeah. There is no local demand, but as we started the discussion, Eastern European countries tend to be small. The companies have to be born global. They are starting to do things from the scratch for the Western markets, exactly. But slowly starting to wrap up, looking into this year, what are your kind of big focus areas? I mean, in addition to somehow managing the, impacts of the war in Ukraine.
Well, we can't manage, anything related to the war. We just have to wait until it is over. But luckily, we're not impacted in our business directly that much. Of course, people, etc., things we discussed. But the focus areas for this year. So we've been consistent in our strategy since 2012, and we continue the same strategy. So I don't plan to change anything in our investment strategy. I think, the difficulty of investment businesses that you cannot see my mother always asks me, okay, so how are things, how, has it been a successful quarter for you? I'm like, Mom, listen, it's in 5 years from now, I'll tell you if this was a successful quarter or not. So it's a longer term cycle. And if you change your strategy, if you change your approach too much or too often, then you can't understand whether you're doing it or the right thing or not. So we stick to our strategy. We continue supporting early stage founders. We continue supporting them building B2B software companies. We try to develop ourselves and be more helpful. One of the things we're thinking about is to maybe open an office in the US as well, because a third or maybe even half of our portfolio, they do end up slowly, selling more in the US and relocating physically or building more presence. So they need us there a lot. We have ideas about being building some value add units, in HR, for example. I think we could be more helpful in coordinating hiring efforts or within our portfolio companies, or maybe even helping them to hire people in some of these Western markets. So there are things that we want to grow and develop. But for us, we were lucky to raise also before even the turbulence started in general, even not the war, because also there was some market meltdown starting in October, November, when the capital markets started to shift down, and there was a lot of a bit of a turmoil. With interest rates rising, I think, and with the energy prices increasing and all of this stuff, and energy situation in Europe, I think that disposable incomes will decrease, right? Profits of corporations will decrease. So I think we're on the verge of this global correction in a major way. It has to happen, right? It has been we've been in the bull market for a decade. So now some correction will happen. For some sectors, some industries, maybe not everything will correct, but certain areas of the capital markets will correct in terms of asset pricing and valuations. So in this type of environment, I think we recommend our portfolio companies to raise money as soon as possible. So if they're raising money now, they should keep raising and make sure they raise. If they're not raising money, they need to go out and start raising right now as fast as they can, while valuation is less important. I think it's more important to capitalize yourself for the next couple of years to make sure you have capital, because most of them are loss making because they grow, they add new customers, and they need to have liquidity. So if you're running out of money in August, September, you must run and raise money now. You can't afford to be in that situation because there is a lot of uncertainty. So that's what we focus our agenda on: supporting founders, making sure they stable businesses, well capitalized. Valuations are less important. It's more important to be stable. Focus on your priorities also. Refocus your priorities. Maybe you don't need to do 10 things, do 5 things or 3 things. Don't be so. I think you need to be aggressive in a competitive environment, but you also want to survive in the end, because if there is a correction that could happen, you want to make sure that you are prepared in advance. Because we have companies like in COVID, unfortunately, all survived, all great, all fine. We managed to, cut the costs and secure positions. But we had companies that raised money just before COVID, for example, in let's say October, November, and they went on the hiring spree, and so they hired a ton of people until March. For 5-6 months, they've been hiring. So that's a cost. And then you cannot fire people overnight, right? Because there are local regulations, etc. You need to give severance packages and everything. So, and then you fire people, right? So we have several companies that went, and that's another cost. And then you raised your round and you lost half of it, a lot of it, because you went through this roller coaster, right? Yeah. And that's highly unfortunate. That's why I think it's important
that happens.
To be cautious.
I think cautiousness is probably a good guideline for startups in this year, and probably focus. What you mentioned is a really good keyword, and focus on what you do to make it a success story. Thanks, Alex, for your time today. It's
Thank you.
Good luck. Join us again for the next episode. Thank you for listening. If you like the show, please give us a good rating and leave the feedback in your podcast player so others will find it too. We will be back next week. Turn on to Nature-Backed Podcast.
What's good, everybody? It's your boy, Paper Route Slay here, coming live to you from the Idlers app, letting you know that you should tap in right now to Streets 100, the only station for uncensored hip-hop, trap, and drill music. Stop listening to the regular stations that got all the skips, edits, and silent treatment. Come listen to the only station that doesn't suck, your only station for uncensored hip-hop music. Streets 100, over and out.
Streets 100 is the real voice of the streets. Yup. And always serving that loud pack for your speakers.
Club DC is your go-to spot for 24-hour dance, remixes, EDM, and worldwide syndicated radio shows. We are always bumping. We are always open. There's no cover charge, and anyone can enter.
Get the Idlers Radio app in your app store and take Club DC on the go.
Party with us at idlers.com/clubdc. Electricast.